What if your money paid you monthly income? Not someday, but starting sooner than expected. Imagine waking up richer without lifting effort. Sounds unrealistic, right? Almost like financial fantasy. But this is how dividend investing works. Companies share profits directly with loyal shareholders. You become a silent partner earning steady cash. No boss, no overtime, no exhausting hustle, just smart ownership creating predictable income streams. But here's the uncomfortable truth most ignore. Many people chase quick gains and lose everything, and they gamble instead of building lasting wealth systems. Dividend investors think differently, far more patiently. They focus on income, not emotional market swings. They understand wealth is built quietly over time. Let me ask you something honestly. How long can your savings support your lifestyle? 1 month, 3 months, maybe a year. Now imagine income flowing without active work. That changes everything about financial security forever. Dividend investing creates that powerful financial cushion. It turns uncertainty into structured, predictable income. But most beginners make critical mistakes early. They chase high yields without understanding hidden risks, and that can destroy confidence very quickly. So the real question becomes very important. How do you build a safe dividend portfolio? One that grows income consistently over years, one that survives market crashes and uncertainty. That's exactly what you're about to learn. And this is not a get-rich-quick strategy. It's a get-rich patiently and sustainably approach. And patience is where most people fail. But if you stay, everything will change, and you'll start thinking like real investors do. Not traders, not gamblers, but wealth builders. Let's break down this journey step by step, because clarity removes fear and builds confidence, and confidence leads to consistent, smart decisions. First, you must understand the core mindset. Dividend investing rewards discipline, not emotional reactions. It's about ownership, not constant buying and selling. You're building a system, not chasing excitement. That shift alone changes your financial future. Most people never make that mental shift, but you're here, and that already matters. Now, let's go deeper into how it works, because understanding removes confusion and hesitation completely. And once you understand, action becomes easier. That's where real transformation truly begins. In the next part, we build foundations. You'll see how portfolios actually generate income and why consistency beats luck every time. Stay focused, because this gets powerful quickly. Your journey to passive income starts now. Now let's build the foundation step by step, because without structure, income strategies quickly collapse. First, understand where dividends actually come from. Companies earn profits from selling products or services. Then they distribute a portion to shareholders. That payment is called a dividend. Simple concept, but powerful when applied consistently. You earn money just by owning shares, not trading, not timing, just holding wisely. But not ill companies pay dividends. Growth companies usually reinvest profits instead. Dividend companies focus on rewarding shareholders regularly. These are often stable, established businesses. Think banks, utilities, consumer goods companies. They generate predictable cash flows over time. That stability supports consistent dividend payments. Now here's where beginners often go wrong. They chase the highest dividend yield blindly. High yield sometimes signals hidden financial problems. A company may be struggling or declining, so yield alone is never enough. You must evaluate the company's overall strength. Look at earnings, growth, and payout ratio. Payout ratio shows how much profit is distributed. Too high means risk, too low limits income. Balance is the key to sustainability. Next, diversification becomes extremely important here. Never rely on one company for income. Spread investments across different sectors and industries. This reduces risk during market downturns. If one sector struggles, others can support. That's how stable portfolios survive uncertainty. Now let's talk about compounding power. This is where true magic happens quietly. Reinvest your dividends instead of spending them. Buy more shares with each payout received. More shares mean higher future dividends automatically. This creates a powerful snowball effect. Over time, growth becomes exponential, not linear. Patience turns small amounts into serious wealth, but consistency is absolutely critical here. Invest regularly, regardless of market conditions. Avoid waiting for perfect timing or signals. Markets move unpredictably, but time smooths volatility. Focus on long-term income, not short-term price. That mindset keeps you calm during drops. Now, imagine this working for 10 years. Your income grows without increasing your workload. That's financial leverage at its finest form. You're building income streams, not trading profits, and that difference changes everything long-term. In the next part, we go deeper. There's a hidden truth most investors miss. It changes how you select dividend stocks, and it can protect you from major mistakes. Now, here's the truth most beginners never here. Dividends alone don't guarantee real wealth growth. That idea shocks many new investors immediately because income feels safe and comforting psychologically, but safety without growth slowly loses power. Inflation quietly erodes your purchasing ability. Your income must grow faster than inflation. Otherwise, you're moving forward while falling behind. This is the hidden trap many ignore. High dividends with zero growth become dangerous. You receive cash, but your wealth stagnates. Sometimes it even declines over time. That's why growth and income must combine. Smart investors balance both carefully and strategically. They don't chase yield blindly anymore. They prioritize dividend growth above everything else. A growing dividend signals a healthy company. It shows increasing profits and strong management. This is a powerful indicator of sustainability. Now here's a mindset shift you need. Focus on future income, not current payouts. Today's small dividend can become huge later if growth remains consistent year after year. This is where patience creates massive advantage. Let's take a simple, powerful example. Company A pays high but stagnant dividends. Company B pays low but growing dividends. After years, Company B often wins big because growth compounds faster than static income. That's the twist many investors miss entirely. Now let's go even deeper here. Price matters more than people usually think. Buying great companies at wrong prices hurts returns. Even strong dividends can't fix overpaying mistakes. So valuation becomes a critical decision factor. Look at price relative to earnings and growth. Don't rush just because markets feel exciting. Opportunities always return for patient investors. Another overlooked factor is dividend consistency history. Some companies increase payouts for decades straight. These are called dividend aristocrats or kings. They show resilience through crises and recessions. That reliability builds confidence and long-term trust. Now imagine combining all these principles together. Strong companies, growing dividends, reasonable prices, diversification. That's how real portfolios are built, not through hype, but through disciplined selection. This is where amateurs and professionals separate. One chases noise, the other builds systems, and systems always win in the long run. But there's still one final piece missing, the part that turns knowledge into results, because knowing isn't enough without action. In the next part, we execute properly and turn strategy into real financial progress. Now it's time to turn knowledge into action, because strategy without execution creates zero results. Start by setting a clear income goal. Define how much monthly dividend income you want. This gives direction and measurable financial purpose. Next, calculate how much capital you need. Use average yields to estimate required investment size. This step removes guesswork and builds clarity. Now, open a reliable brokerage account. Choose platforms with low fees and strong reputation, because fees silently reduce long-term returns significantly. Once ready, begin building your portfolio gradually. Never invest everything at one single moment. Spread purchases across time to reduce risk. This strategy is called dollar cost averaging. It protects you from poor market timing decisions. Now focus on selecting quality dividend stocks. Look for consistent earnings and strong balance sheets. Prioritize companies with growing dividend histories. Avoid unstable businesses with unpredictable income streams. Discipline here protects your future income stability. Next, build diversification across multiple sectors. Include industries like healthcare, finance, energy, consumer goods. This spreads risk and strengthens portfolio resilience. If one sector falls, others provide balance. Now, automate your investment process whenever possible. Set regular contributions from your monthly income. This builds consistency without relying on motivation. Consistency always beats occasional large investments. Now comes a powerful wealth building decision. Reinvest dividends instead of withdrawing them early. This accelerates compounding and increases future payouts. Over time, your income begins growing faster. That's when momentum starts working for you. But remember, markets will not always rise. There will be drops, crashes, and fear cycles. This is where most investors make mistakes. They panic and sell at worst moments. You must stay calm and focus long term. Market drops often create better buying opportunities. Strong companies become cheaper during fearful times. This is when smart investors increase positions. Now, review your portfolio regularly, but not obsessively. Quarterly reviews are enough for most investors. Check performance, dividends, and company fundamentals carefully. Replace weak performers with stronger alternatives if needed, but avoid unnecessary frequent buying and selling. That behavior destroys long-term compounding benefits. Stay committed to your strategy through cycles. This is how real wealth gets built quietly. Now you understand both strategy and execution, but one final step remains very important. The step that defines your long-term success. It's about mindset, discipline, discipline, and consistent action, and it will shape your financial future completely. Now, everything comes down to one powerful decision: will you stay consistent when motivation disappears completely? Because success depends more on discipline than knowledge. Anyone can learn, but few apply consistently. This is where real investors separate from dreamers. You now understand how dividend portfolios truly work. You know the risks and the real opportunities. You've seen why patience creates long-term wealth, but none of it matters without action. Small actions repeated daily create massive results. One investment today is better than waiting forever. Time in market always beats time in the market. Start with what you have right now. Even small amounts can grow significantly over time. Don't underestimate the power of starting early. Every delay costs you future compounding growth. Now imagine your life 5 years ahead, income flowing regularly without constant active effort, bills covered through dividends instead of salary stress. That freedom is not impossible anymore. It's built through consistent, disciplined investing habits, but only if you commit long term. You must ignore noise, hype, and distractions. Focus only on your strategy and goals. This mindset protects you during uncertain times. Remember, markets reward patience, not emotional reactions. Stay calm when others panic and sell. Stay consistent when others quit too early. This is your competitive advantage over most people. Now let's make this very practical. Set your first investment goal today clearly. Choose one strong dividend stock to begin. Invest and track your first dividend payment. That moment changes your mindset forever. You realize money can work independently for you, and that realization is incredibly powerful. From there, continue building step by step patiently. Add new investments regularly without overcomplicating decisions. Keep learning, but prioritize action over perfection. Perfection delays progress more than mistakes ever will. Mistakes teach faster than endless hesitation ever could. So take action, learn, adjust, and continue forward. This journey is long but rewarding, and every step brings you closer to freedom. Financial independence is built, not magically achieved. You now have the blueprint in your hands. The only missing piece is your commitment. So ask yourself one final honest question: will you act now or wait again? Because waiting keeps you exactly where you are. Action moves you toward the life you want. Start today, even if it feels small, because small beginnings create powerful long-term outcomes. Your future income depends on today's decisions, and your journey to freedom begins right now.